lyrical songwriter and he could sing. Bringing in money like raking in leaves. I was just trying to get paper to sneeze. I chew, that was a blessing. She's special to you, I don't look at her special. Actually, I treat her regular. Not being seen, we not making no spectacle. Gave that a first and he gave it to Kevin. All the above, we do all the etc. Scared of the fans, had to switch out my cellular. He talking reckless, don't call me back ever. Passing through Garden to holler at Glover. Shout out to Black, shout out to Shaggy. Break Monte Carlo, Cocaine 911, just holler that trap. I'm like the rap from my section, ridiculous. Watch when you steppin', pockets on indigent. Can't be too careful, Steve like I'm tall. And when they yellow, broken in college, fresh with low mileage. I like them black, pretty white teeth, body unique, booty on fleek. Jenny Aiko, chewing the cheeks. Groceries, please, you know that was me. My diamond shine, cause they really diamonds. That bitch is in line, they be really trying. They ask me if I'm high, I say really, really. Got money on my mind, I say really, really. I look like I've been ballin' cause I'm really ballin'. I wanna apologize, I'm not really sorry. They ask me if I'm lying, I say really, really. I'm really on my mind, I say really, really. Really, really. That would be treacherous. Pray to God that don't nobody mess with us. Keep it strong in case anyone testing us. Right or wrong, if it's this, you don't mess with it. When your bitch over here, I don't mess with her. No detective work, I don't be questioning. Where she been trying to read all her messages. I don't speak on no man that's irregular. Take her phone, disconnecting the cellular. What you need that for undressing her? What you did that for caressing her? Spreading her legs about to pleasure her. Pulling her hair from the back or the pressing her. Trying to see who's had first made a bet with her. Relationship flaking, no eczema. She catching feelings, she say we inseparable. Oyster perpetual, it's not a replica. Mustang GT in the street smoking vegetables. Trunk in the front, do it make me an elephant. I really preserving my beverages. Shopping in Beverly, check out my etiquette. Loving my swag, women Taylor keep checking. The carrots they glistening all of my necklaces. Feeling myself, really thought it was elegant. My diamonds shine, cause they really diamonds. That bitch is in line, they be really trying. They ask me if I'm high, I say really, really. Got money on my mind, I say really, really. I look like I've been ballin' cause I'm really ballin'. I wanna apologize, I'm not really sorry. They ask me if I'm lying, I say really, really. I'm really on my mind, I say really, really. Really, really.
All right, what's good, everybody? It is your boy JM Pips. Right now, I just wanted to give it a little bit of time to let everybody else join onto the call, join onto the session, let them get enough knowledge and education on the three pairs that we are going to be identifying on tonight's session. So if everybody can just do me one quick favor. I'm pretty sure you're on here. Either you're in the Telegram group or you follow me closely on Facebook, which is amazing. I definitely want to extend my gratitude and appreciation to the individuals who have been following, not just myself, but the FX Legacy movement for an extended amount of time. So I definitely want to appreciate you and say that I really am grateful for the follow and the opportunity for me to educate and teach you on how to become more professional and profitable within the markets. Now, with that being said, I am trying to take the extents, the value, the knowledge, the nuggets, and everything else that I could possibly give to a higher level. Everything on Facebook that I previously was doing is great. I was reaching my branch, I was reaching my individuals, but I want to make sure that I'm impacting not just a few people's lives, but hundreds of thousands and millions of people's lives as well. So this is going to be I would say the beginning stages to that. And I really do appreciate everybody that is on the call right now to be in the very beginning of those stages on how to create 6 to 7 figure traders without having to blow the bank, without having to be in a team, without having to be in an MLM, just by simply following some simple rules, some simple, I would say, ideas and aspects within the market to become profitable. So you guys just could do me one quick favor. The value that I provide is amazing, but the only way and the only reason why I continue to give this value is because the amount of people who are benefiting from it. So please tag, share, allow other people to gain the knowledge, allow other people to gain the information, and allow other people who obviously are trading the Forex markets who may have some questions that need to be answered so that way they can be more successful in their own individual trading. By all means, get them on this call, get them on the session. This is absolutely 110% free value, just giving back my time for everybody to obviously become more successful as well. So I am going to be looking at the comments within this call as well. So if you guys have any questions, if you guys have any comments, if you guys have any markets you guys want to obviously identify as well, be sure to put that out as well. The three main markets we will be identifying, and I think the only three markets that we should be identifying for the remainder of the week is gold, GBPJPY, and GBPUSD. Those were the three main markets we all wanted to identify and also voted on in the Telegram chat as well. So those are going to be the three main charts we identified. So if you are on your phone, tablet, or laptop, computer, whatever you're on, by all means, feel free to mark up your charts the same way I'm about to do this for you all as well. Let me get rid of this so there's no confusion. So make sure that you are marking this up in a manner that's going to be beneficial for you, and also so that way you can obviously make money with this. We're not just marking this up and identifying these things for absolutely no reason. We are identifying these specific prices and aspects within the market so that way we can obviously become profitable and make money off of these ideas as well. So I'm going to be very, very keen and very detailed to these three specific markets leading into trading opportunities. So that way everybody here not just gets some information, also gets some money as well. So again, if this is your first time, there is a minor delay whether we are on Facebook or YouTube. There is a 5 to 7 second delay here on YouTube as well. So please bear with me. If I answer your question a little bit too late, it's not because I ignored it. It's because I literally just seen it pop up. So I want to make sure that you guys understand that there is a delay as well. So I'm going to be looking at the comment section here in a bit, but the first market we will be jumping on will be gold, because that is I think that's the main market everybody wanted to identify on the vote for today. So this will be the first market that we identify. After this, we will lead into GBPJPY, and then we will also lead into GBPUSD. The other two predominantly voted pairs everybody wanted to identify. But those two pairs may have some type of very common correlation within them, not even just fundamentally, but also technically. And we will take a look at those here shortly. So looking at here in gold, I'm just going to look at the comment section below before I move on to gold to make sure that I'm accommodating everyone's questions, to make sure that if there is a question that I can answer while we are looking at the chart of the gold chart, I'll definitely make sure we do that as well. Let's get it in. Oh, no questions. Everybody just seems to be listening, which is beautiful. So the predominantly voted number one pair, or market rather, everybody wanted to identify in today's Telegram was gold, which is amazing, right? Gold is a great pair for anybody to trade, especially if you have $1,000 or more within your trading account. The reason why I say if you have more than $1,000 in your account is because gold can literally blow your account within a few moves or one move for that matter. But if you can understand how to trade gold in a beneficial and profitable manner, you can literally get your financial freedom just by trading this one pair. And obviously with other pairs as well, but gold is a very strong pair when it comes to either making bank or breaking bank. So we want to make sure we're very careful with the ideology and also our trading within this specific market. So what I am going to do is I'm going to scale out. I am on the daily time frame. You're going to see a very common theme with how I personally trade the majority of all of the market. So for me, I'm on the daily time frame. I don't need to go this far back to understand what I'm currently looking at. I like to personally identify what the market is currently doing, because if I look too far back, let's say 1776, that's already been made. 1776, that price has already been gone through. Can't make any money off of that. If we lead into a specific area of price and structure that will be significant from that time period, then I'll definitely take note of that. But as of right now, with gold, we are currently not seeing that. What we are currently seeing, and this is not going to be an accurate trend line by no means. I'm just showing you this to show you the direction of the market. Actually, that is an accurate trend line, but I did not mean that by no means. But what we can see, break that word down, trend line. It is a line signifying and showing us the true trend and direction of where this market is currently headed. And in case anybody's confused, and I will make sure that I come back to the YouTube chat or the comment itself to really make sure that I understand everything you guys are saying. But what we can identify with this current market, again, I'm on the daily time frame, which means that the higher time frame is the stronger the confirmation. If I can understand what a month, 2 months, 3 months, a year, 2 years of what a market is doing, the majority of that market to continue in that direction is going to be in our favor. So we can currently see that this was a low point. We actually got a higher low, and more higher lows as we continue. We can also see that the market created higher highs throughout this market as well. Now, what is the significance with the market creating at a support level a higher low and at a support level a higher high? And as the market continues, it continues to create these higher highs and higher lows. What is the importance between that? Well, that's a really good question. Let me answer that. If we have a market showing us, again, this is not an accurate trend line. This is just showing the depiction of where the market is most likely headed and going into. It's most likely headed in the upwards direction, right? We have these higher highs, higher lows. When we see these ideas, that is telling us, in this case, after a strong, I wouldn't say a strong seller's market, but if we look back, this was a seller's market. Now we are kind of getting the complete opposite idea. We are getting the idea of a potential market reversal, right? Because we are getting market momentum, higher highs, higher lows rather, with these higher highs being made. Now I'm going to mark this up, and the way that I'm going to mark this up is going to be very beneficial for anyone who is trading gold. I'm only showing you the idea of the fact that right now I do believe that gold is going to continue to be bullish, meaning that we are looking for continuous buys. The way that I'm going to mark this chart up now is going to not only confirm the idea of current buying opportunities, but also kind of show you the idea of where I think the buy may stop being a buy and may end up being a reversal, turning into a selling opportunity. So I'm going to mark this up in a few ways. You're going to understand this in the manner of why I think there's going to be a continuous buying opportunity. And then I'm also going to show you the opportunity where, or the price level, where I think that this is going to stop being a buy and turning into a selling opportunity, or i.e. a reversal. So being on the daily time frame, I emphasize, not highlighted, but I emphasize on when I say the daily time frame. I'm also slowing that down. Take note of that. It is very important that you understand that we trade off of the higher time frames, such as the weekly, daily, 4 hour, and so on. Monthly, don't get me wrong. If you want to trade off the monthly, by all means, higher the time frame. But for me personally, because I know a lot of the questions I get is, what time frame should we be focusing on? Me, I would say the daily, weekly, and monthly. Are you basing your trades off of those? Are you entering? When you enter a trade, should you be on the weekly time frame? No. When you enter a trade, should you be on the daily? No. But these are the type of time frames we should be on to identify long-term trading opportunities and just what the market is doing in general. So me being on gold, I'm being here on the daily, I'm going to now just mark up some things that for me will be a form of relevance. And relevance for me is significant areas of price. Now, what I mean by that is I'm not just talking about support and resistance or supply and demand or highs and lows. That, to me, is the dumbest idea in the world. We have to understand what the market gives us. Can supply and demand be broken? Can support and resistance be broken? Absolutely, it's broken all the time. We can see it here within gold. What we have to identify is relevance, the most significant area of price, the most significant level of market where the market or a specific pair rather is going to give us a reaction. This is called price action trading. Break that down. We are identifying a specific level of price, so that way we can identify the actions that proceed in that price, so that way it gives us a potential entry. Everything that we do is leading to an entry point. We are not specifically adding up, support and resistance zones because they're cool. It's a good, markup. We want our charts to look cool, or the colors on our charts are great. No, we are marking these up for potential profits. We are marking them up so that way we can make money. So let's mark up gold in that same manner. So me seeing gold in the manner that I'm currently seeing it at right now. Again, I'm only wanting to identify what this is currently giving me. I don't care what happened in 1776. I don't give a fuck. What is currently happening is extremely important. What can I currently see? Well, let's identify. This was a low point. This created a higher low, a higher high, or a higher high and a higher low. Higher high, higher low, higher high. You get the picture. I could do this all day. The market is literally showing us as a retail trader in the direction it wants to go. Don't believe me? Let me show you how. In order for us to understand the momentum, the value, and the true direction of where the market is heading and where it wants to go, it has to show us valid, strong, convicting breaks of a specific level, meaning that this right here, if you wanted to, could be considered a counter trend line. Now, why would that be considered a counter trend line? Use common sense. Let's identify. This is a bullish market. Low, high. This is a counter trend line because it's going against the initial bullish trend. Why is that significant and important? Because not only when it is broken does it show me the opportunity or the direction of the market, it's also showing me the opportunity for potential entries. If I look left to get right, we could have put a buy stop right above that initial range. But that's not important. I'm just trying to go back into previous price history to show you what the market is currently doing when we get to where we currently are, right here. So we got to identify what previously happened to get an educated inference and an educated guess on what we should be potentially doing on the next trade setup. So what initially happened? We had a break above to the upside. Not only did we have a break above to the upside, we had a higher high. We had a higher low. That is screaming market momentum. Now, in order for us to trade, I'm not going to go too far in detail because I know we do have a lot of trading or different trading experiences within this call. We have beginner, intermediate, all the way up to advanced, especially with the names that I see here. We definitely have some advanced individuals, but I also see those very beginner names as well. The one thing I want everybody to take note of, breakout patterns. Because these breakout patterns, and this is homework, I really want everybody to understand how important it is to do your research. If you're only looking at videos and then not applying yourself, you're losing half the battle. If you're only looking at, your company's videos, I promise you, you're definitely losing that battle. It's about understanding what the market gives us on a daily and consistent basis. So breakout patterns. So what is the significance and importance of a breakout pattern in any type of market? Well, the reason is a screen stuck. How many trades or group members? Oh, I'm going to be looking here in the YouTube chat here in a second. A lot of you guys are just listening. But if you guys have any questions, by all means, feel free to ask there. If it seems like the screen is stuck, it's not. I just haven't moved it. But you can understand the reasoning behind why, the importance behind Breakout patterns is really important. What type of pattern is this? Identify. I'm not going to tell you. This is your homework. Identify this. Why is it important to understand breakout patterns? Well, because if you can understand that this was a breakout pattern, a bullish breakout pattern at that, you could have either gotten in at any entry down here or the retest right here. That is to show the experienced traders why we should be identifying not only going with the direction of the trend, but also to understand what we like to call continuation breakout patterns. This being a bullish flag, in case anybody wants to know, bullish flag is considered a continuation pattern. Now, why is that important? Because a lot of people are probably like, well, if this is a bullish flag, why would that be considered important? Well, if we have a break of structure, being that this was the last structure high right here, we broke above that with a strong impulsive move. This is its correction. This is its next impulsive move. But this impulse would not be relevant or important if it was not broken to the upside, also retested to the upside as well. So the reason why I'm explaining this, and again, if you are confused, I completely apologize. I go way into detail and explain things so that way everybody understands and retains the knowledge for my students on a daily basis. I explain this in greater detail because obviously I have a lot more time with them. But what we can identify is just simply this. Impulsive move, break of structure. So we actually have another impulsive move here being resistance with a break of structure and also that retest of it. So if I just move this down, we can see the retest of that previous structure. So what can I expect right now with gold? With gold, we have another impulsive move. Why is that important? Because this is now creating a higher high. What does that initially mean? When we have a break of structure, when we have a newer high or a newer low, that is bringing in new buyers and or sellers. In this case, since we have a higher high, this should, leading into this week, bring in new buyers. Oh, didn't mean that. There we go. Bringing in new buyers. And the reason being is because not only did we break above this previous high, we have also broken above this previous high. Now we're getting into the idea of what to do with current market structure. In order for us to do that, we need to go back into understand what previous market history has given us. The reason being we have to do that is because is it giving us momentum? Is it giving us direction? Is the market clearly showing us where the market wants to go, whether it's bullish or bearish? What we can currently see with gold is it's very much bullish. We can see the higher highs. We can see the higher lows. We can see how the market is creating that more of a bullish idea. In order for us to know where this market will reverse, i.e. sell, we have to use the higher time frame, such as the weekly and maybe even the monthly. So what we're going to do currently is jump up to the weekly time frame. And on the weekly, we can clearly see, again, not an accurate trend line, but just the direction of the market. We can clearly see what this market is doing. I'm going to draw a line right around here so that we understand that this was a level of resistance that was convincingly or just broken pretty strongly. Look left to get right. What do I mean by that? If I look left, did we break above a previous high point? We absolutely did. This was an area of previous strong resistance. Not even daily, weekly. This is monthly. This is yearly. If anything, this is dating all the way back until 2013, where this resistance level, which is currently highlighted, could not be broken. What has currently happened? We broke above that resistance level. So let's put this. Break above equals strong buys. Because when we have a strong breakup structure, we are going to identify the volatility and direction of what the market originally wants to do, which is be bullish. Now, in order for us, at least for gold, to identify the next potential selling opportunity, we have to identify the most relevant area of structure. Now, for current time, we can't see that gold is actually retesting current market structure. So we can do this. Retesting broken structure. Get rid of one of these T's. Boom. It is retesting broken structure, meaning that the market can actually find some form of selling opportunity within this initial range. Do I think it's going to be a sell right now? Absolutely not. I do think that the majority of this market will reach these specific highs. And the reason why I think it'll reach these highs is because absolutely nothing is confirming the end of this trending impulsive move. How do we determine, because I know that's the next question as well, how do we determine that the next level of structure, i.e. being this high here, will not be met? Good question. Let me answer that. We can see how the market is currently retesting this previous area of broken structure. It is retesting that. If we get confirmation within our candlesticks, the biggest missing piece to all the puzzles and to every successful or somebody who wants to be a successful trader is candlesticks and how to identify them and where to identify candlesticks. I'm not going to go in depth on how and where to identify them, but understand, because I got to leave that for my students, understand that candlesticks tells the true story of what the market is going to do. So if I see right now that this is an area, again, break that word down, price, action. If I'm currently at a level of price, i.e. retesting an area of previously broken structure, the next thing that is needed is a form of action to tell me the next move that the market is going to make. What are those form of actions? Good question. Let me answer that. You have candlestick reversal patterns. You have candlestick continuation patterns. You have advanced patterns such as harmonics or Elliott wave. Me personally, this would be considered an advanced pattern, but I would not take light of it until the market shows, right? This is what I'm currently looking at least for gold. If this level of structure is not respected, I would see what we can consider here a bat pattern, an advanced pattern, a harmonic pattern at that. So I'll put this, a bat pattern, which equals a harmonic advanced pattern. If you do not know how to mark up, identify, or just without even having to mark it up, just visually see a harmonic pattern, I suggest you use a few resources. I'm going to write them down right here. This is free information. I'm not making any money off of anything that I'm showing you right now, even the education I'm giving you right now. So if you want to learn about advanced patterns or how to identify harmonics and become, I would say, more efficient with technical analysis, understand advanced patterns being harmonics. And if you're looking for a specific book, look for Harmonic Trading. And this is a free PDF that you can all download by Scott Carney. Now, if Scott gets mad, I apologize. He is the only person who ever taught me how to identify specific things. He also taught me how to trade harmonic patterns in a professional manner. He is the creator and the inventor of all harmonic patterns. He is also the inventor and creator of the harmonic indicator, like any harmonic indicators, the harmonic scanner, There's also another website where they have harmonic readings. He is an inventor and creator of all those. So this is extremely beneficial for us to understand. Now, why would this be beneficial for me to understand, and why did I kind of go off on a tangent? Well, for one, I really want to make sure everyone understands that there are resources such as Google that you guys can use to become professional and consistent traders. I'm going to refer back to that real quick. I'm not a guru by no means. I'm still very much a student of the game. And what I have noticed is if you do not take initiative, meaning that if you don't fucking wake up and realize that you have Google as a resource, you will never be successful or profitable within the markets. I'm going to rephrase that. Google has everything you want. Just simply Google your thoughts. I have questions all the time of what time does the Forex market open? Do you realize if you fucking Google that, it'll give you the answer and then some. Google will give you the answer to everything in detail, in description, and then also open up other windows and other doors, if anything, of opportunities for things for you to realize and understand, and maybe other important things to study. The biggest thing I want everybody to take out of this is not just what you see here on the charts, but also understand that it's also up to you. 80% of it is up to you. I can bring you to a lake, I can bring you to a well, but I can't force you to drink. It's up to you. If you're thirsty, you're going to drink. If not, oh well. But what's really important for everybody to understand is you have to really dig deep and know that you want this. Is this hard? Harmonic trading? Absolutely not. It's only as hard as you make it. Is trading Forex difficult? Absolutely not. It's only as hard as you make it. We're going to take a look at that here with GBPUSD. Kind of answer some questions and get an idea with this to really show you how easy it is to trade the Forex markets. I'm on the weekly time frame. I'm on the weekly time frame because, again, I want to understand the bigger picture, really see what's initially going on in this market. I'm going to get an overall bias of what this market is doing, not an accurate trend line, but just showing the direction of the market. We can clearly see I'm in a bearish market. So I should be looking for selling opportunities up until a few points. Label this out. I'm marking this up to understand where I am in current market structure. What I can currently see is actually a bullish breakout pattern, simply with a line and a box. What can I currently see? The market was creating, or at this point was a high point. This is a lower high. This is a lower low. This is a lower high, so on and so forth. We can see lower highs and lower lows being made until when? Until the market stopped right here. This is a level of support. So I'm going to label this as a level of support. Drag this out to the side. So currently, we are in a buy range. Why would we be considered in a buy range? Well, good question. Let me answer that. We can currently see how the market has been in a downwards move this entire time, but for some reason, we had a bullish reaction from that price. And then when we came back to that price, we actually had another bullish reaction. So the long-term idea, especially with current market status, is to understand more along the lines of a buying opportunity. We can see the respect of that price level low. What are some other things that we can determine and kind of get the idea to confirm a potential buying market here? Well, for one, I'm on the weekly time frame. I'm only understanding the general bias. I also want to scale down. If I'm on the weekly, we have to go down to the daily. This is called time frame correlation. I'm not going to write it down. I'm not going to remind you. This is your time. This is your job to understand what's important. Write down what you think is important. What I just said, time frame correlation, the last time I'm going to say it, is important. So take note of that. My students hear that every day. They understand the importance between time frame correlation and the importance in understanding when to enter a trade utilizing that concept and when to stay out of a trade utilizing that concept as well. So the few things I can currently see with this current market, if I could just get my tools right there, it is. Where we at currently? We had a market rejection of this level. Did we have a bullish engulfing candlestick and break above the low point? We absolutely did with this candlestick here. Don't believe me? Just watch. Scale down to the daily. We can see how the market respected this range. We can see how the market broke above this initial high. I'm going to draw this out right now. This line, I'm going to delete a few things. We're going to get a little detailed now. This is how I find my pristine and prime entries. You're probably wondering, oh, I'm going to learn how to get it. You're probably not. This is just like one of the factors on how I determine it, but you're not going to be able to get the entries based off of this. But what can I currently see right now? Well, at least on the daily, I can see a bullish engulfing candlestick. I can see that even on the higher time frame, we broke a level of previous structure to give us an early indication of market direction. And what do I mean by that? I'm on the 4 hour, or I'm sorry, I'm on the daily. You can't see that currently. In order for me to confirm what I see off the daily, I have to confirm what I see off of the 4 hour time frame. What can I see here off of the 4 hour time frame? Like I drew this line, this was able to break above a specific level of structure. Not only did we come back to retest that level of structure and have a bullish impulsive move, we also were able to break above a level of previous highs. What did the market currently just do? Retested that level before a break to the upside. But in case anyone is confused, we could have seen this happen a long time ago before any of this even happened. Just so that way we can understand. We identify price, action. This line is the area of price that we need to identify. Why is that important? Good question. Beautiful question. Let me answer that. Because if this level of structure was broken to the downside, this would determine and confirm a continuous sell. But we didn't get that. We got a respect of this level. What does that mean for me as a trader? Well, for me, if I got a respect of a specific level, that means we're going to bring in new potential buyers. Now, in order for me to get that confirmation of the level, I got to scale down to smaller time frames and understand, again, what is happening at a level of price, because the actions is what shows me the next potential move. Understand what I just said. Level of price. Level of price. Because again, we are identifying with price action based trading. Without that, you really ain't going to get none. So let me go down to the daily time frame. Probably can't see it here either, but I am identifying a level of price and I need to identify the level of action, because everything currently right here, just so everybody's wondering like, oh, what does all of this mean? I don't fucking know. And nor do I fucking care, because none of this is important. None of it. What's important is for me to, again, identify price and the action that proceeds with it. Write that down. That is the last time I'm going to say that. It is very important that we understand that small concept. The basics is what makes us money in trading. Don't believe me? Look at my bank account. Look at my success. I have not ever deviated from basics and understanding what the market gives us. Patterns. Patterns is what gives us the next idea. We are at a level of price. What is the action that is needed at these levels of price? Patterns. Advanced patterns, such as we saw previously before. Advanced patterns like a harmonic. Is there a pattern such as a breakout pattern? Bullish flag, bearish flag, bullish pennant, bearish pennant. Is there any type of head and shoulders pattern, being inverted or regular? And a head and shoulders pattern is a pattern that gives us an early indication of a reversal, meaning that if a market was selling, it's probably turning into a buy. If a market was buying, it's probably turning into a sell. Time frame correlation, the same thing we just went over. And the reason why I said it's important, because I'm on the daily. I can see I'm at an area of daily, weekly, and even yearly level of structure. But if I scale down to the smaller time frame, I need to, or just in general, I need to understand that this market is actually going to use this level of price as a form of rejection to turn into a buy. What confirms that idea? The patterns. What type of pattern do I currently see here with GBPUSD? Inverted head and shoulders pattern. What has also happened, we had a break of the initial neckline. What happened at that break of the initial neckline. We also retested that neckline. Don't believe me? Impulse, break of the neckline with the retest being right here. Retesting this area of neckline. So for me, for the individuals asking about GBPUSD, I'm going to take a look at GBPJPY right after this. It's probably going to be almost the same thing. The first area of targets will be this level of structure high. Now, why would that be? Good question. Let me answer that. We are currently in a considered in an area of no man's land. This is all no man's land. I'm going to write this down so everyone understands. Now, why would this be considered no man's land? Because if we look left, if we look all the way over here, there's no significant, strong, and or important level of structure that is going to stop our price from being bullish until we get here. Now, why would it be here? Well, good question. Use common sense. Was this used as a level of support? It absolutely was. Was this used as a level to break below to confirm the direction of the market? Absolutely. Look at this impulsive move right here. Break below, retest, impulsive rejection move. I do believe that GBPUSD and the majority of all other pound pairs will continue to be bullish. So this is what I would see for GBPUSD in case anybody wants to look for a potential trade. I personally cannot send this up, unfortunately, onto the YouTube chat, but what I would suggest is if everybody takes note of this and just marks this up the same way that I'm about to do this myself. So I'm going to do this. This is my buying opportunity. I'm going to say, let's say in a perfect world, the market comes down to here and we look for a buy. I personally don't like having anything more than 50 pips as far as a stop loss, but I can kind of see the market ranging around here. So we're gonna have a 60 pip stop loss. Our first take profit is about 300 pips, right? Our second, third, fourth, you wouldn't even need to put a take profit because we would hold that up until your kids is born. If you ain't got no kids, I guarantee whenever you have kids, you take profit at that point. That's how long we would obviously be wanting to hold these initial targets. But for me, this would be the ultimate high. So this is where I would see GBPUSD eventually going long term. It's going to have selling opportunities up until we get to that point. Absolutely. We may not ever get to that point because it may react bearish off of this significant level here. But for my honest opinion, and when we go on to GBPJPY, you're going to kind of see the same idea as far as a pattern and projection is concerned. But my honest idea right now, GBPUSD will continue to be bullish up until this designated point. After this point, it will not stop being bullish up until we meet these ranges, this range high. So that's my honest opinion with GBPUSD. Now I'm going to take a look at GBPJPY. This will be the last market I identify because for some reason nobody's in the chat on YouTube. It just seems like everybody is paying attention, which is beautiful. I definitely appreciate that. It seems like a lot of you guys are learning like a lot at that. So I definitely want to make sure that I'm answering any and all questions that has to do with relevance that pertains to you, that you're going to be able to utilize as your own for your own individual trading and be able to duplicate my success as a trader as well. So I'm going to look here in the YouTube comments really quick. Somebody says, "Hi Jay, do you trade gaps? I see market open with a gap." Here's a really good. That's a beautiful question, by the way, Nick, and I appreciate you because you're a student and you asked a beautiful question as a student. And I'm going to actually answer that. I would usually leave that exclusive for legacy students, but since you are on a public chat or the public session, I am going to answer that publicly since everybody is on. I'm not going to shy away from that. Here's the real thing about gaps, right? Or market gaps. We only see gaps in two essence. We see a market gap every Sunday because the market is opening and the brokers were closed. So the brokers are closed every Friday at 5 p.m. The brokers are closed, but the market is still very much open. What do I mean by that? Do we still spend money every Friday, Saturday, and Sunday? Even though the Forex market is closed, the currency market is closed? Absolutely. There's money being spent every second, every millisecond. So that market needs to be open in order to understand the fluctuation in price even when the broker is closed. Why is there a gap? Good question. A gap happens when a market opens because the fluctuation of the price that it's catching up through, or the broker itself is catching up to, that happened over the weekend. So if the dollar was worth, or the US dollar was worth, let's say $1 today or on Friday, and during the weekend it grew to being over $4, for whatever reason, the broker itself gaps up or gaps below to accommodate the fluctuation in price. So that way, when the broker is now open for traders to obviously identify, it gives it accurate pricing behind it. So that way, there's not a thing called market manipulation, because a broker can get in trouble for that. Two, the second reason, because either a strong news, I wouldn't say a strong news release, but a ton of orders. So let's say the entire world plus the moon wanted to buy Euro USD at the same exact time at 4 p.m. So let's say at 4 p.m. there's 10 trillion orders being fluctuated in that same time through that broker. It's going to take a while for that server to process all trades and all orders. So there might be a gap between that market because of the fluctuation in price, because it was just like such a short amount of time. So let's say like within 5 seconds, everybody wanted to buy. The broker itself can't accommodate within the server to get those orders in at the same time. That is a market break, or not a market break. That is a market gap. So do I personally trade market gaps? No, I don't, because that is the riskiest, or that's the easiest way to lose money. Because the essence and the concept between a gap is that all gaps are supposed to close. I guarantee you, the next person that tells you that, fucking fire them, because they're fucking stupid. They have no idea how the markets work, and they don't understand why a gap is even brought out and why a gap is even a gap in general. That's just me being real. You don't trade a gap because a gap is not supposed to always close. This is the true essence. Let's say USD JPY. We'll go to USD JPY real quick. Let's say USD JPY, a gap to the downside, which is beautiful. Let's take a look here on the 1 hour. A gap to the downside. It closed that gap. Not all gaps are supposed to close, so let's not get rid of it. Let's not, get too caught up with that. Did this gap close? It absolutely did. So let's be risky for anybody who's on this call right now. This is the concept of what I was going to lead to next. Let's be very risky. I personally don't trade on Sundays. I'm personally not even going to place this trade, but I know a lot of people do trade on Sundays and are very risky or have the ability to do so. Let's sell USD JPY right now, meaning let's place a sell order. Let's enter market execution, no limit orders. We're looking to sell USD JPY right now, and I'm going to give you the reasons behind it, and also show you the reasons why I personally don't give a fuck about gaps. So for one, our stop loss is going to be about 35 pips, right above the previous highs here. Our take profit, don't even worry about a take profit, because if this continues to sell, this is not going to stop. But what we can currently see is a few things. The market has gapped to the downside and corrected and filled that gap. What we are also looking at, just in case anybody is wondering, is the retest of market structure. So within that market, or that retest of market structure, being that this was previous support, which is acting as a newfound or new level of resistance, I would be looking for potential sells from here. I'm also going to use another form of confluence, which is going to be my fibs. I can already eyeball it, but I already see here at 38.2. So I'm within a kill zone for this general market here on USD JPY. Now, the reason why we're on here, again, is not because we're looking for a potential trade. Obviously, I do hope that you guys place this and it goes in our favor. But to identify that the fact that when we are looking at the charts, when we are identifying anything, and also to understand the gaps, that the gap may close, but when we have a gap, that's the true direction of where the market wanted to go. So this entire weekend, USD JPY was a bearish move up until now, because that's correct to confirm or just to correlate with the broker itself. The gap direction is the true market movement and where it most likely wants to go. So my honest opinion, especially, and we'll go back to GBPUSD, but for USD JPY, because this is something I was personally looking at during this week to trade, this is what I would look at. You know what I mean? So going to GBP USD. This is what I would currently look for us to enter. Now, I was looking for a potential re-entry back at this level. We can already see that it came to retest this previous range. It actually had a bullish move. So why would I, or what should I do? I'm just simply going to adjust. I'm moving my entry here. Actually, let me rephrase that. I'm going to move my entry to that point. Now, the reason why I'm looking at this designated area for an entry point is because the market has already broken above here, right? It broke above this previous point to create a newer high. It's probably going to come down to retest this previous area of structure for a potential buy. So we actually kind of see that happening now. So with this inverted head and shoulders pattern, with this idea that the market has created a structure high and actually retested these levels to continue in the direction that we are hoping for it to go to, I would still be looking very much bullish with GBPUSD as well. It's very important that we understand the higher time frame aspect and the true direction of what the market is doing. If it's creating higher highs and higher lows, that's where the market is going. If the market gaps in a specific direction, that's where the market is going. If we see a respect of a level, we are obviously looking for that market to respect that level and continue in that fashion. Meaning, let's say we come back to a resistance point like we are here and it gets respected, then we look for that market to continue. But the biggest thing I want everybody to take with you is a checklist of entries on why, when, and how to enter. First thing you should always identify is, where are you? Meaning, are you at a level of structure? Are you at a level of previous support and or resistance? Did you break out of this spot and are you retesting it? That is very important. So where are you in the market as far as like what are you looking for to enter? Second, candles. I can't emphasize, and I tell my students all the time, emphasize on what candles are. And they know which candlestick reversal patterns, continuation patterns, and exhaustion patterns they should be identifying on a daily basis. But candles, if anything, candles should be number one. Candlesticks is the number one underlying factor on why you are not successful within the markets. I promise you. I can almost guarantee it. If you don't know what a doji is, if you don't know what an engulfing candlestick is, if you don't know what candlestick reversal patterns, are, do your homework, do your research. If you mentor, if you're a trainer, if somebody is not teaching you that, fire them. They have no fucking idea what they're looking for. It is important that we understand that candles tells us the true story. So what do I mean by candles? Reversal, continuation, if I can spell it right, continuation, and exhaustion. Those are the type of patterns that you should all be identifying when it comes to candlesticks. And again, I am in the YouTube chat. I can see your questions if there is any. But since there is none, I'm just identifying a few things, those three main markets we want to identify and voted on. And also just giving you some tips and tricks and kind of giving you an idea of what I personally like to identify when I'm looking to answer a trade. But if you have questions, type. Go into the YouTube chat. Let me know. I am paying attention. I am looking, and I am more than welcome, or I'm more than willing and feel more than honored to help you become more successful within your trading career. So I am paying attention. But this checklist is literally the checklist I go through before I enter a trade and obviously identify the markets with as well. So candlestick reversal patterns. Where are you? Candlestick reversal patterns. Confluence. What forms of confluence are you using? I.e., fibs, indicators. I personally don't use indicators. But if you do, by all means, if it helps, it makes sense. If it makes money, it makes sense. Indicators. Fundamentals as well. You can understand fundamentals or geopolitical factors that are going to correlate with the specific pairs and markets that you are identifying. That will help you out in the long run as well. Let's see what we have here. We actually got some questions coming in. Can you send a link for the markup through Discord? John, by all means, just let me know, man. This is more along the lines for everybody. So if you want the link for it, if you want the chart markup, just mark it up the same way that I have it here. You know what I mean? I'm not going to send it up through Discord. This is free. This is free public, analysis. So I'm going to make sure that everybody gets this. But if you want, just mark it up the way that I have it, or simply message me and ask me. I got you no matter what. USD try 4 hour just close. What would you call that? Anything that has to do with on a Sunday and a Monday, I really don't give a fuck about, because anything that opens and closes on a Sunday and a Friday, I'm not calling it anything. You can call it what you want, but what I will call it is a fake out, because what happens on a Sunday? The market's just open. What also happens on a Sunday? There's no volatility. So what also happens on a Sunday? False readings. So what could end up being a bullish engulfing break out of a structure could just be considered a bullish engulfing fake out and a continuation to the downside, meaning that it closes back into structure, giving us a false reading. So anything that happens on a Sunday as far as what's currently happening. So I don't give a fuck about what candles are opening. I don't care about what candles are closing. I don't care about any support or resistance that's being, violated or respected. I get my confirmations on Mondays and Tuesdays because the market is actually a market. There's actually traders. So anything that's happening right now, I really don't care. Don't even pay attention to it. So whatever you see on USD try on the 4 hour, you determine however you want to determine it, but I'm not going to see what it is until it actually fruitions and flourishes to be what it's supposed to be. And that'll be found out by tomorrow afternoon or Tuesday morning when volatility actually comes into the market. And me personally, this is another thing as well. I don't trade USD try. Now, why would that be? Good question. Let me answer that. That is considered an exotic pair. So that means your spreads are going to be fucking ridiculous. So if you have a standard lot size on a pair like USD TRY, your spread is probably going to be more than $100 to $200 initially once you open it, if you have a standard lot size, because of the spread itself. Even with a point or a micro, you can even end up with $1 to $2 deficit right off the bat. If you don't think that's important, be with a spread and a volatility or a pair of volatile like that, be in deficit, you could lose $30 to $40 with a 0.01 lot size within an hour or two. So be very careful with that. If you don't understand how to trade the 6 major pairs, meaning the most, accurate, easy, I would say the easiest to follow pairs, you're probably not going to want to trade those specific pairs because it's going to throw you off a lot. Those pairs take experience and exposure on the charts as well. And personally, I don't trade those exotics. So hopefully that kind of gives you an idea. But yeah, don't trade something that's not too volatile and doesn't have too much backing. Trade something that actually you could have some volatility with and some confidence with as well. Got you, bro. I'm trying to mark up moving. I got you. So you only trade Tuesdays and Thursdays? No, I don't only trade Tuesdays and Thursdays. I trade Monday through Friday, but it just depends on the setup. You know what I mean? There's times where I don't trade at all. There's times where I do trade only on Sundays. There's times where I only trade on Thursdays and not any other day throughout the week. If the market gives me an opportunity, I am going to trade it, whether it's on a Sunday, whether it's on a Thursday. But I also understand that if I'm trading on a Thursday or on a Sunday or a Friday, the volatility is not going to be that great. And I also know I need to be taking profits or scaling out some of my trades at a specific time because of how the markets are going to react at a specific time. But no, I do not only trade on Thursday or Tuesdays and Thursdays. I trade every opportunity the market gives me. The next question I also got is, what markets do you trade? Which pairs do you trade? Look to my right over here. You see all these markets here. I trade all of these. If it pays bills, it makes money. It makes sense. I'm not only subjecting myself to one pair. I'm not just looking at AUD USD. I'm not just looking at USD JPY. I'm looking at every specific market I can trade. If there's 13 trading opportunities for the day, I'm trading 13 opportunities for the day. Simple as that. All right, so hopefully that kind of gives you an idea of what type of markets and pairs that I trade. I trade them all. All right. So would you mind giving me your take on USD MXN? I'm not going to give you any ideas with USD MXN because I would give you the wrong description and the wrong idea on that because, again, that is an exotic pair. I personally do not trade exotic pairs because they are not stable. They are wonky, if you will. They will be a buy for 1 second and then a sell the next. Me personally, I like stability. I like to understand the functionality and the structure of a market so that way when I place a trade, it's not a guessing game. We want to be confident within our trades. We don't want to be guessing because when you guess, you place a micro, please 0.01. When you're confident, you place a standard and above. Me placing a trade on USD MXN, a market that I personally do not trade, or even to mark it up, I give you the wrong information. And I would definitely help you lose money in that sense because I don't personally look at that. I do not trade exotic pairs. Exotic pairs on some markets are way too crazy with the spreads, like I recently just said. And also, the opportunities with those are not as great as well because if nobody's trading it, there's not going to be that many opportunities. So I'm not going to give you an analysis on USD MXN because I personally don't trade it, and I don't want to give you the wrong information and lead you in the wrong direction. But with USD MXN, it is again an exotic pair. So if you know how to trade exotic pairs, by all means, feel free to do so. If you don't get affected by the huge spreads that these exotic pairs and also the huge commissions and swap fees that they offer, by all means, feel free to do so. But I would not be trading these pairs unless you have more than $1,000 to $5,000 in your trade account. So that way you can suffice the trade fees or the swap fees, commissions, and also the spreads. Be very vigilant with that. Everybody wants to trade NAS 100. Do you understand that you place a micro on NAS 100? It's equivalent to a standard. So it doesn't matter what your risk management is. It's understanding also the markets you're trying to trade in. So very, very important. Understand that factor as well. TM, what are the 6 major pairs again? If you were not a part of the session from earlier this session, the one indicator. This is the one indicator I want everybody to utilize, right? So the question was, what are the 6 majors? I'm going to answer that question with a question. What is Google? Now, in case everybody's like, oh, why would you just say what is Google? Let me phrase something for everybody to understand because I'm going to be the realest person when it comes to this trading industry. Why am I telling you to check Google? Go to Google right now and type in the 6 major Forex pairs. You're going to get your answer. But why am I telling you to go to Google instead of answering that question for you? Because when you do your due diligence research, when you take the initiative and stop, and I'm not saying everybody's lazy. I'm speaking for myself because when I first started this, I was the laziest dude. But when you take the initiative and you stop being lazy and you actually do and you actually search, you retain that knowledge 10 times more than you asking somebody and then telling them the information. Why? Because you went, you looked, you found the resource, you did the research, you took the time to read. You didn't have anybody give you the shortcut answer. You got the true definition. What is that going to do? It's going to give you the answer for everything else. You're going to understand and retain that knowledge for the rest of your life. It's like riding a bike. When it came down to learning to trade, I never asked simple questions such as what pairs should I trade? What time does New York session start? How do I put my stop loss? What is MT4? What does PIPS stand for? I didn't give a fuck about that because I also understood that Google gives me the answers for all of that. Google a lot. I guarantee you retain the knowledge more than what I can teach you. That is the biggest nugget I can give to anybody. If you want to retain knowledge, if you want to learn how to trade, if you want to be consistent, if you want financial freedom, if you want to actually make $100 to $1,000 a day, get the fuck up off of your seat and Google. That is the biggest nugget I can give to anybody. Google, Google, Google. So what are the 6 major pairs? The 6 major pairs are going to be US-based pairs such as GBPUSD, USD-JPY, Euro USD being the main, the common, and the number 1 traded pair within the entire Forex industry. Euro USD. Understand, Google what the 6 majors are. That is going to be your biggest help, right? Google, Google, Google. Take the initiative. You retain the knowledge way better, and you will learn how to trade way quicker. You don't believe me? You're on that side of the computer. I'm on this side. I'm teaching, you're listening. I'm teaching you and showing you what I did in order for me to become profitable. Google. Nobody ever sat me down. I never was on one session to teach me how to trade. Google. How did I learn candlestick reversal patterns? Google. How did I learn how to mark on my charts? Google. How did I understand anything within Forex? Google. And I retain that knowledge because I searched for it. Don't get me wrong, ask as many questions as possible. But within those questions, I'm also going to show you how to retain that knowledge faster, more efficiently, so that way you can obviously succeed within your Forex career a lot quicker. I guarantee you, search. Go take the initiative to find it your own, and I promise you, you'll be more successful. That's just my little rant. That's just like my little rant being 110% for you all to understand. That goes for everybody to really understand the difference. Everybody wants to know what the difference is between this person and the next person. Oh, I know I'm smarter than this person, but how is it that they understand how to trade faster and more efficiently than me? Because they probably searched it on their own, and they probably have the psychological aspect and the factor that's needed to become consistent and profitable. Google. I promise you, Google will help you with everything. So I'm going to kind of come back in the YouTube chat here and see what else you guys got for me. Yes, Google is definitely your best friend. All right, I traded USD TRY and Euro TRY for profit. Take profit to date, even though I hit profit. The swap fees and commissions will eat the profits. I just wanted to see if my strategy worked for exotics. I mean, if you're profitable, I mean, you answered your own question. A lot of the time, I feel like you guys understand what you guys are doing. You just need, like, for somebody else to show you. Fuck that. You don't need anybody to show you. How are you supposed to build your own confidence, right? Am I going to be on the charts when you're trading? Probably not. And if you do ask me anything, I'm probably not going to answer it because my trading's already done and my profits is already in the bag, and I'm probably enjoying the day. We also have to understand no one's going to hold your hand when you're trading. No one's going to say, yes, absolutely, buy this and sell this, put this lot size, your stop loss should be there, unless you're paying for it. If you pay for it, by all means, listen, but if you're not, if you're on your own, you have to do two things when you're an individual retail trader. If you're not getting help from the company, if you're not getting help from a person, if you're not getting help from Google, if you're just using yourself, your own common sense, you need two things. For one, you need to understand that common sense is the biggest thing, right? Common sense is the biggest thing. If you are negative $500 with a micro lot size, and you ask somebody, should I take the loss or should I hold it? Common sense. You don't need anybody to take the loss. But how are you supposed to build your confidence in trading? Confidence is what builds lot sizes. Everybody wants to have these fucking great entries. For instance, everybody wants to get that perfect sell so we can post it on Instagram and Facebook because we sold it right there. Perfect, to the wick. What's your lot size looking like? Probably a micro because you don't know. You're not sure. You're uncertain. But where would you place that standard lot size? I would place my standard lot size right here to the upside for a buy. Now, why would that be? Because I have market direction. I have confirmation. I put my stop loss, or I'm sorry, I put my entry right here. It doesn't matter if I got in all the way down here. Fuck that. Didn't get in down here. That's a micro. I'm not too sure. But this is where that standard, double standard, 10 standard comes into play because we have confirmation. Confidence is what controls our lot size. You can never feel confident or be confident within trading if you, as an individual trader, are not giving yourself anything to be confident about. You can feel confident about taking somebody else's signal, but do you feel confident about taking your own? Probably not. So that's where confidence, that's where education, and that's where becoming an individual with trading comes into play. I can come into the charts with 10 different traders in the same room. We can come up with the same idea on the same chart, on the same market, but our charting, our strategies, our analysis, our ideas might be completely the same, but we have the same idea to enter. Our confidence is going to be the same no matter what our chart analysis looks like. I don't care what mine looked like against the next person's. I feel confident with what I'm looking at. You build that by doing your own due diligence research, by doing your own due diligence, trading, and by being able to develop your own eye, your own preference for trading. These are all nuggets. These are all more along the lines of how to understand how to become your own individual trader and what's needed to become successful. 99.9% of trading is all psychology. It's all psychological. The two things that runs the market is greed and fear. Greed and fear are two feelings, or i.e. psychological factors that individuals feel on a daily basis when we trade. So if you have that idea and the confidence, that will control your lot sizes and obviously help you gain a little bit more money. So hopefully that small little rant, kind of a little bit of nuggets there, also helps everybody. It also kind of motivates you to understand that searching and Google really is all that you need. You don't need an MLM. You don't need a guru, fucking mentor. You don't even need me, honestly. People use me for a guide because I give them the accelerated version of how to become profitable within the markets. But I taught myself how to trade. Did it take me a while? Yes, it took me about a year or 2 years to fully feel confident within trading. But if I was to feel confident before that, just using Google, I would have been able to be a consistent and profitable trader within a month. The first month of me understanding what trading was as far as Forex is concerned. The confidence level was what stopped me from being consistent and profitable years ahead of my time. So understand that, right? Break that down. If you understand how to trade, if you understand how to your specific style of trading, you're confident within it, you're going to be successful. You're going to make a ton of money. So hopefully that resonates with a lot of people here. Hopefully it helps for you to understand how to, for one, be fucking on Google, take the initiative, study. The more knowledge you put in yourself, the more knowledge or the more money you're going to put in your pockets. Don't believe me, trust me. I make $1,000 to $5,000 trading a day, but that's trading a day. That was a goal. I knew that was going to happen. But what I didn't realize within that, the knowledge that I gave myself, the information, the time that I invested into my own individual self, I've been able to now currently make over $120,000 to $150,000 monthly residually without even trying, just by giving me the education and knowledge. And all I did was teach myself how to trade. It opened up other, windows and doors of opportunity. Take this as a stepping stone. Very important. So let me go back to YouTube. I know I'm on a rant, but I just want to answer any and all questions to the best of my ability. I'm very detailed with the things that I like to explain so that everybody understands the way that I think, be able to pick my brain, and also answer any questions that haven't actually been asked just yet, because I know a lot of you guys are probably just in your minds asking questions. So let's see what else we have before we conclude. I don't see trading these pairs in the future. There are other currency pairs with lower swaps commissions. Again, 6 majors. Those 6 majors will be your best friends. You'll be able to trade the same way you traded USD TRY, USD MXN, any other exotic pair. You'll be able to trade any of these current pairs as well with proficiency. I'm just going to take a look here at US 30 really quick because this is exactly what I wanted to identify. I'm actually going to mark this up because for tomorrow morning, this is going to be great for me and my legacy students, because just to fill you guys in, I'll be looking for a buy, taking profits roughly around this high point here, then looking for a sell up until either end is broken. So just wanted to come on to US 30 really quick. Let's see what else we have here in the chat. Look for the time when to trade. Hey man, that depends on where you are. I live in New York City. So what session do you think I trade? The New York session. People in London, they trade the London session because that's their time frame. People in the Asian continent, they trade the Asian session. Why? Because they're up and at 'em around that session. So common sense question with a common sense answer. You want to understand what time you should be trading? Wake up, wherever country or time frame you're at. Identify what type of market you're in when it comes to Forex, whether you're in New York, London, Sydney, Asian, whatever session you're in, then trade it and understand how to trade that specific session. Common sense questions, common sense answers. Google is your best friend. I can never fucking emphasize that any stronger. Google. Well, thank you for the rant. I think I needed to hear that. Thank you so much for your frankness. Yeah. Now, I'm going to be the most realist, person when it comes to this trading niche. I'm not going to say that, yes, with $50, you can make $10,000 in a day. Fuck no. I'm not going to be that person. I'm going to tell you the realest shit. You put $50 into an account and you put a standard lot size with that $50 account, you're going to blow it. I'm going to be that person to tell you the realistic aspect and what the market is. This is not a get rich quick scheme. This is a get poor quick scheme. You can live under a bridge really fast if you make the wrong moves with this market. What I'm trying to do and trying to help with is to accommodate that and help you obviously make profits and not fall victim to the same mistakes that myself and other professional traders have made throughout these years. But yes, this is definitely something you want to take note of and be very cautious with as well. Yeah, answered my question. Paying 6 currency pairs. Yes, the 6 major currency pairs. Once you identify those, you can't go wrong. I'm just coming back again into the questions, the comments. What is your take on gaps, please? Like on gold Monday, I literally just went over gaps on all markets. So if you want, I'm not going to refer back to that. Just refer back to the recording. I did refer onto what gaps were. Again, gaps happen the beginning of every market open because the brokers are closed, but the markets are still open. The brokers are just accommodating to the market fluctuation price when the broker actually opens back up on a Sunday. Again, that is something you can Google. Google's your best friend. I can't emphasize that even anymore. But again, go back to the recording. I did emphasize what gaps were. And if you're wondering what the gap on gold was, again, all markets gap on Sundays. If you want to understand why, go back into the recording. Or again, Google. You'll understand that bigger. USD MXN, I may have missed if you went over. No, I did not go over USD MXN because I'm not going to go over any exotic pairs. I will give you the wrong information and the wrong, analysis on that because I personally don't trade that. The reason, again, if you want to go over the recording because of why I don't go over or trade currency pairs that are exotics, again, just really quickly because the spreads are big. They're not as volatile. No real traders are trading those pairs for profits. And we're only focused on pairs that are going to be affected on every trading period. During London, Asian, New York, Sydney, during those sessions. Exotic pairs such as USD MXN, USD ZAR, USD, all these other crazy pairs. I don't trade them. I can't give you information on those because those are not my favorited pairs. And I rather trade something where I put a standard lot size on and don't get a $300 deficit due to the spread and due to the fact that it is an exotic pair. So I will not go over any exotics because I really don't want to give the wrong information and I don't want to steer anybody in the wrong direction in general. But what I would suggest is stay very far away from exotic pairs because the only people who are trading exotic pairs are individuals who are unexperienced and understanding that those are not pairs to be traded until you have a significant amount of money in your trade account or a significant amount of trade experience, which is reflected on your trade account. Because you put a micro lot size on an account or on an exotic pair like that, you can still blow your account. So I would stay very far away from those. That's just my personal opinion, and that's just my personal preference of trading. So yeah, I apologize. I can't go over USD MXN. Ayo, with the US 30, I marked a retest on the neck of that M, Isaiah. Then you're perfectly fine. You're perfectly good. I would, respect. I would feel confident, not respect. I feel confident with your analysis. Trust your analysis. So if your analysis looks kind of like mine, then you're already on the right track. I'm looking at US 30 for a potential trade. I'm just waiting for the confirmation to come into play. Recommended account size for trading US 30, more than $1,000. And my honest opinion, more than $10,000. If you want my honest opinion, $1,000 can be completely lost so fucking fast with US 30. So my honest preference, if you're going to trade US 30 and US 30 alone with little to no experience, and you're only coming onto the markets with little to no experience, I would say $10,000. And that's so that way you can have some leverage room for your fuck up because you're going to make mistakes with this. If my honest opinion, though, if you're new to trading and you have not traded anything else, I would stay very far away from US 30 because that's how you're going to lose your money and going to want to quit Forex very fast because you're going to think it's not for you because you're going to lose a lot of money. So Be very cautious with that. But I would say $1,000 is the bare minimum. And even with that is risky. But if you want some leeway, if you want to be in the game for a little bit of time and still, be risky in a sense and risk a little bit, $10,000. That's true facts. If somebody says, nah, 100, 500, 1,000, tell them to kick rocks because they're only using you for a sign up and for their own money and because you're a benefit to them. Fuck that. Be realistic. We are not trying to pay anybody but ourselves when it comes to this shit. US 30, $1,000 is still risky. $10,000 is your best bet to trade. Anybody else tells you otherwise, unless they can show you for a fact with real put out on their trade account or an actual, my FX account, don't trust them. Tell them to kick rocks because they don't know what the fuck they're doing. I guarantee you. I promise you. I've been in this game way too long to understand fakes and real people. Real people will tell you the same exact thing I'm telling you right now. Fake people will be like, yo, yes, you can put $5 in an account and turn it into this as long as you signed under this link. They'll tell you whatever the fuck you want to hear as long as they're being benefited. No, by no means. Absolutely not. $1,000 is the bare minimum, and even that's risky. $10,000 is to feel comfortable trading US 30 with confidence. And that's with little to no experience. If you have experience, if you know how to trade, fuck. You could take $100 and turn $100 into $10,000 with US 30 with experience, with knowledge. Without that, you ain't going to do much. I promise you. I ain't trying to sound disrespectful or rude by no means. I'm just being very honest because I'm not searching for no fucking signups and I'm not searching for anybody to be on my team. So what you do with this information, I could care less. Obviously, I want you to do the most with it. I want you to make money. I want you to be successful. I want you to get that financial freedom. But I mean, you do whatever you want with it. You could believe me or not. You'll believe me after you lose the money. And I hope you don't and don't come back to me and be like, yo, I should have listened. Listen now. Don't make the same mistakes I made. And don't make the same mistakes 100 people make every single day. I see it every day. So that's just like my little honest opinion as well. I trade the Tokyo session and Sydney session. Do you have any insight for any of those sessions? Like which Aussie pairs are best? Which NZD pairs are best? JPYs are best. All right. Common sense. Use common sense, my mans. You're trading Tokyo and Sydney. So you're wondering which pairs to trade during those sessions. Whether it's Aussie, whether it's Asian or yen pairs, you're trading Aussie session. So any Aussie pair is going to work because you're trading the Aussie session. Just like if I was to trade the New York session, any US pair is going to work. So you answered your own question with that. And if you're trading Tokyo session, I mean, self-explanatory. You answer your own question with that as well. Again, that's a Google question. That really is a Google question. If you're trading Sydney session, so any Aussie pair. If you're trading any Asian session, if you trade Asian session, any yen pair. Common sense. You know what I mean? Like everything that we do within trading is within the context of the words that we say. Trend line. It's just a fucking line that's showing us the trend and direction of the market. Support is a level of price that is supporting the market from breaking below. Resistance. The market is resisting from breaking above a previous area of price. An impulse. The market has impulsively moved in a direction. A correction. A correction is correcting from the impulsive move to gain some strength to get to the next impulsive move. Everything is within the definition, is within the context of the words that we say. Extremely important. So, Asian session, you're trading any yen pair. Sydney session, any yen pair. You know what I mean? Like, use common sense. Very important that we understand the underlying factors of what we are saying when we're trading. Overcomplicated, I guarantee you trading will be complicated. Make it easy, I guarantee you trading will be easy. Once you start fucking dictating, oh, this has to be this, the mayonnaise has to go over the rainbow. Once we get to the end of the rainbow, we got to talk to the leprechauns to get the pot of the gold. Once we get the pot of the gold, then we enter the trade where we got to enter a specific lot size because the third cycle of the rainbow. Fuck that. That's market maker method. You have to understand all these different algorithms and methods and crossovers and indicators. No. Keep it simple, or keep it the KISS system. KISS, right? Not keep it simple, stupid. Keep it simple for success. We do not want to overcomplicate anything that we're identifying and looking at. What I can identify is a few things. What I want to identify is the next step for me to get to the next step, and so on and so forth. I don't want to go all the way back again, like I said before, 1776, to understand what's currently happening right now. What can I currently see what's going on with US 30? Level of support. Boom, let's do this. Support. What do we do at support? We buy. Very simple. So what should I be doing with US 30? Because there's no confirmation to the downside. I'd be looking for buys. Now, if anybody's going to sit here and be like, oh, I'm going to buy this right now because he said, I guarantee you're going to lose money. Don't do it. This is just an idea, a description, an inference. I do that. And what happens when I get to that high point? Oh, I probably take profits. Why? Because common sense says that resistance is here. Market can't push above. Next take profit is going to be here. Why? Why would this be my take profit? But because this is the level of support. Can't be broken below up until a level is broken. So for me, again, common sense. Don't overcomplicate it. Make it as simple as possible. Identify the type of market you're in, ranging, trending. There's only two types you can be in. Trade within those ideas. Make it as simple as possible. So hopefully that kind of like helps as well and gives some confidence. But yes, yeah, that's really important. Like if you're trading the U.S. session, what pairs should you be trading? U.S., USD/JPY, GBPUSD, Euro USD, anything with the US cross pair. Common sense, right? If it doesn't, if you're trading the New York session and then you're trying to wait for a huge move on GBPNZD, you're probably going to have to wait a while, maybe for London session or the New Zealand session, right? You're going to have to wait for the Aussie session. Kind of makes sense. So again, pair everything together, make things come into sense, right? Like again, if you're trading U.S. session, you only want to, or the U.S. dollar, you're going to want to predominantly trade that during the U.S. session. You're not going to want to trade the U.S. dollar during Asian session. U.S. dollar is not going to be that volatile. All right, and that's the reason I follow you, boss. You 100% real, and you want to see your students grow. Yeah, absolutely. You know what I mean? I'm going to keep it 100% real because I wish everybody kept it 100% real with me. I wish that I knew what risk management was before I started. I wish I knew that you did not need to be in an MLM company and build a team of other fucking blind individual traders who had absolutely no idea what they were doing with trading. I wish I knew that, you know. So I'm going to keep it as real as possible. I'm going to keep it, as honest as possible. I want everybody to understand that this is not a get-rich-quick scheme, that there is no gurus, that there is no 100% strategy where you can never lose a trade. I lose trades every single day. I lose trades all the time. I lose money all the time. It's all about consistency. It's all about understanding how to deal with the losses, how to come back from those losses, how to identify your specific own trade strategy, and what to identify as an individual, as a trader, just in general. Like, that's the biggest thing. So I'm not only going to keep it real, I'm also just going to make sure that you, again, just don't make the same mistakes I do. I want to see everybody win. This is a very easy task. Trading is not hard at all. Like, look at this market here. Let's identify this as being one of the easiest methods of trading. This is a low point. This is a high point. This is a low point. This is a high point. This is a low point. This is going to be a high point. Why is this concept important? And why is it important that we identify the market as simple as possible? Because if I see the market high, if I see the market low, I see that this is a level of support. I'm going to want to buy from this level. Simple as that. And I'm showing you guys what you can literally be fucking doing right now. I'm going to buy into that range. Now, why would I buy into this range? Because that will be considered my take profit, or also resistance, where I'd also be looking for a potential sell. More money. So let's get rid of that buy. You could do this in a ranging market. So then what happens here? Take profit. Why would we take profit? Because this is a level of support. Look how easy this shit is. Like, you guys think it's hard. It's not. We buy from here up until that range high. It seems difficult. It seems impossible. But what is the market doing right now? We found a ranging market. We found a range low. If we didn't buy from there, it's perfectly fine. We could have sold from here because we knew this was a level of resistance because of previous structure here. We could have sold. You're going to take profits right here because we're coming back to a level of previous support. What can we do? We can take profits and then do what? Buy. Buy until when? Take profits at previous structure. What can we do from here? Sell. Same idea from previous structure. History repeats itself. Comes back low. What can we be doing here with US 30? If we are currently in a buy range, in a ranging market, we can possibly be buying into the next structure high, or i.e. this range high. Make it difficult or make it as easy as you want. Identify the highs and lows. Buy, sell. Continue, sell. If this level is broken, continue buy if this level is broken. Oh, you don't know where to enter if it's broken? Well, good question. Let me answer that. Let's say if it breaks to the downside right now. Let's say we wake up tomorrow morning or wherever you are in the world, tomorrow afternoon, tomorrow evening, and the market has broken and created a low point. That's cool. Am I going to take this and move it? No. I'm going to leave it right there because I'm going to wait for that market to retest this area of structure. Enter, because now I have a confirmed idea and direction of where the market wants to go. I'm going to enter. Simple. No mathematical formula needed. No questions needed to be asked to professional traders. No second guessing anything because I understand how price reacts around specific, or how the markets reacts around a specific price. Again, price action. Identify the significant price being this resist or support level. Identify the action now that proceeds within this area. The action could be levels of structure and respect with candlesticks, meaning exhaustion or rejection candlesticks. We can have a double top at this level. We can have an advanced pattern even complete at this level. But for me, no matter what happens, this is a level of entry for a buy or for a level of entry for a sell. So keeping it as simple as possible, I'm only identifying the relevance within the market. Nothing more, nothing less. So hopefully that kind of answers some questions and gives you guys some insight. I personally been on a really long time. I'm going to give you guys a break. I personally got to also get my charts marked up for my students for tomorrow morning on our live session as well. I do teach every Monday through Friday, every day, pretty much Monday through Friday. During the New York session, I teach or I train them. I give them all the tools, resources, and every outlook more in detail than what you currently see right now, answering any and all questions. So that way they can get that financial freedom and really understand how to trade the markets in a more professional and consistent and profitable manner as well. So I'm going to conclude this session here. I will be doing these every Sunday, though. I will be jumping on the charts, analyzing some charts, and really giving back and helping the understanding with everybody. So that way you could also come onto the charts throughout the week, get some initial setups for myself and maybe some other traders that I have come on and be guests as well. So that way you could duplicate our chart markups and identify your own individual setups and entries. So that way you can make some money and profits throughout the week as well. So again, I really do appreciate every single individual who has been on tonight's session. It has been a great one for myself as well, just identifying a few things and really not really going over too many charts. We were able to go over the three main charts, but also to kind of give back some nuggets, some information that you really don't hear that often, especially from marketers, because marketers just want you to hear, fine, dandy, great things where, the fucking world is on a pedestal and you don't have anything to worry about. No, I'm going to teach you how to specifically trade the markets consecutively and consistently, but I'm also going to let you know that there is hardships, that this is not easy, and this is not supposed to be taken with a grain of salt, because if you do, I guarantee you won't be successful in this. But I will show you how to mitigate your risk and also not make the same mistakes I did as well. So for everybody who is on right now, thank you so much for being on today's session. Again, these will be periodically every Sunday. I will be answering any and all questions and really making sure that I analyze and project the markets for potential trade setups. So hopefully you were able to look at some of the charts that we were able to look at, which was gold, GBPUSD, and GBPJPY for any potential trade setups. Maybe you also were able to identify your charts and mark them up the same way that I currently had as well. If you are a student as well, by all means, feel free to hit me up. I'll see you guys first thing tomorrow morning. We will be looking at the charts, and I will be looking to add a few things at no extra cost. It'll still be the same cost, but try to add some things for you all as students so that way you could progress and continue to excel within the Forex markets as well. With that being said, thank you guys so much for today's session. If you guys have any questions, by all means, feel free to hit me up directly. Please share this YouTube channel. This is going to be the most valuable and the most successful YouTube channel when it comes to Forex education and mentorship and really giving back as much value as possible. I guarantee it. I promise it. I don't give a fuck what anybody says. I don't care about any other trading, YouTube channel. I promise you, you're not going to get any other value. You're not going to get any other education. You're definitely not going to get any profits the way that you're going to get from myself in this channel and from following myself in the brand of FX Legacy. I can guarantee you that I'll put $100,000 on that if anybody can prove me wrong. If you can't prove me wrong, I guarantee you I'll send you a check for $100,000. And I'll be sure to not only send you the $100,000 in a check if you want cash, I'll do that, but I'll also implement the value that is needed so that way I won't fall victim to losing another $100,000 as well. That's how confident I am with my vision and the future that I have with what I got going on. So again, thank you guys so much. I know I said it before, but have a great night. Hopefully everybody had an amazing weekend. Tomorrow is Monday. We're starting a great trade week. So hopefully everyone has a profitable trade week as well. If you're watching this on the recording, appreciate you watching this in its entirety. Hopefully you were able to gain some knowledge. With that being said, everybody have an amazing night. For my students, I'll see you guys tomorrow morning. I'll see you guys on the next one. Thank you guys so much.